This podcast is sponsored by AXA Farm Insurance. AXA offers tailored cover to fit your unique needs, whether it's public liability or protection for your family home, outbuildings or farm vehicles. Based in Athlone, the AXA Farm team of agri-specialists and regional managers work together to ensure you receive the seamless support you need. Switching to AXA is easy thanks to an innovative online service that enables you to quickly and easily find the best cover for your needs. For more information, head to axa.ie. AXA Insurance Stack is regulated by the Central Bank of Ireland. Thanks for listening, and we hope you enjoy the show.
Hello and welcome to AgriFocus, the podcast from Agriland that takes a closer look at the issues that matter most to farmers across the country. I'm Francess McDonnell, and in this episode I'm joined by Thijs Geijer, Senior Sector Economist with the Dutch banking group ING, and he specialises in the food and agriculture sector. We're chatting to Thijs following the decision by EU member states to approve the trade deal with Mercosur. The Council formally gave the go-ahead to the signature of both the EU-Mercosur Partnership Agreement and an interim trade agreement that will apply while full ratification proceeds. Now, tens of thousands of Irish farmers recently gathered to protest against the EU-Mercosur deal. But Thijs, let's go back to the basics. We're heading into a crucial vote on the EU-Mercosur trade deal. But what do you believe this deal is actually about?
Hi Francis, and hello to all of your listeners. In my view, there are three important dimensions, especially if you look at it from the macro level, because you have the economic dimension like GDP growth, trade growth, and the likes. Then you have, of course, the geopolitical dimension, because it shows like how the European Union and how European Commission is acting in a time where we see a lot more geopolitical uncertainty. And there's like the diplomatic, or you could also say like the symbolic dimension, like how the EU shows that it can still agree on such deals. That's more at the macro level, and I would say that there's also like at the more individual level, or like the micro level, company or a household, there's also three dimensions. And then this deal is also about jobs, about livelihoods, and about business opportunities.
And a lot of the discussion has been focused on food prices. Why has that become such a key issue in this debate?
Yeah, well, I think first and foremost, because food prices rank currently still as the number one concern for households, which is understandable since we've seen extraordinary increases in grocery prices over the past 3 to 4 years in Ireland, but all across the European Union. So we're talking about, in many cases, 25 to 30% average grocery price increases across the EU. And these increases are caused by multiple factors. So wars, you have extreme weather events, higher energy cost, subsequent wage increases. So, of course, when you want to show the value of a deal to consumers or to households, then food prices is something that touches everyone, of course.
And there's a widespread assumption that more imports mean cheaper food. But you've argued that EU consumers are unlikely to notice much difference. Tell us about that.
Yeah, so I would say there's different reasons why this, like the measurable impact of this deal on food price is very negligible, especially in the short term. Because, well, we've seen like a lot of news about this deal, but there's still some hurdles that still need to be taken before it really comes into becomes effective. And then, of course, we've seen that there is quotas for products like beef, poultry, and sugar, and these quotas will only be expanded over multiple years to avoid sudden price drop, because that would be detrimental for farmers. Secondly, quotas will be larger than they are today, but they still represent only a small portion of total EU consumption. For example, for beef, the tariff rate quota for beef represents only 1.5% of total European consumption. And thirdly, the cost of like the agricultural product makes up only a part of the final price that the consumer pays. So this is all about like wholesale prices or market prices, but the consumer price also has a lot to do with how wages develop, how like rents for supermarkets develop, or other costs for restaurants develop. So the agricultural input price is only one part of the price that the consumer pays.
We have had quite a big debate about the quotas and what's going to happen when they're fully in place. And one other issue that Irish farmers are very worried about is the impact the Mercosur deal will have on the price of beef or poultry on supermarket shelves in Ireland. So do you think it will mean that the weekly shop in Ireland will suddenly cost less?
No, I wouldn't. I wouldn't counter that, especially like for the reasons that I've said before. And there's also, in that sense, there's a much more uh, interest. Like it's much more in the political interest to make sure that you don't have any sudden price drops for these agricultural products that are involved. And these products only represent a part of our total grocery expenditure, because of course beef and poultry, pork meat, well, meat is a big component of like our total spend on food and drink, but still there's many other products that are also part of our grocery basket. And if we look at more like historic trends, we see that like usually food prices go up at a moderate pace every year, so maybe about 1.5 to 2% each year. And this deal won't change that like underlying dynamic where you see that food prices generally tend to go up.
And when we look at something concrete, because we have farmers on one aspect, but we have consumers on the other. And if we look at something concrete like a steak or a beef burger in a restaurant, just to go back on what you're saying there, how much of what consumers are paying is actually the steak or the burger, and how much is the other percentages on labor, rent, and energy, for example?
Yeah, so that's a good question, and that's also something that can help to make it really tangible, right? So, well, let's say I'm a restaurant owner here in the Netherlands, and I go to a wholesale trader here, and I buy a kilogram of ordinary, like Irish beef steak. It will cost me maybe 25 euros for a kilogram, and clearly more premium cuts like ribeye would cost more. So if I'm a consumer and I go to that restaurant and I buy that steak with some fries and maybe some other sides, my steak weighs well maybe 150 grams. Well, so the input, like the price that the restaurant owner pays for that specific steak is maybe 375. But the meal that I pay for cost me about 20 to 25 euros as a consumer. So I would say like in such an example, the price of meat is only 15 to 20% of the total consumer price of the meal. So that shows again like that there's many more cost aspects involved, like rent, labor, marketing, and profit margin as well.
And just going back to the European Commission, it has pointed very strongly to the economic benefits. It's one of the key issues that it's been selling in Ireland. But the headline number is pretty modest. It's around a 0.1% boost to GDP by 2031. How should we think about that?
Yeah, so I would say like if you it's common practice to indeed translate this into like a GDP impact. I think first of all, it's also good to realize that the EU economy is massive by itself. So total GDP for the European Union amounts to, well, like say 18 trillion euros. So that's like an 18 with 12 zeros. Uh, and if you then calculate 0.1% on that 18 trillion, well, it still leads to a big number, right? It's still 18 billion euros in GDP growth in 2031. So that's equivalent to adding like the economy of the smallest country of the European Union, Malta, to the European Union, like to this to GDP. Uh, at the same time, a lot of the economic activity in the EU is centering around services sectors, and this is a trade deal that's mostly about trading goods, and it's also a trade deal with the continent and with countries that are quite far away. So in general, if you look at European trade, about 60% of total trade is happening within the European Union, and about 40% with of total European trade is happening with countries outside of the European Union. So also because of the geographic aspect and because of like how gradual certain tariff rate quotas will be introduced, or how import tariffs will be reduced, this is something that will only materialize in small step, and it's not like a big big bang at one point in time.
One of our political leaders here in Ireland has called this a deal that's really about mercs and perks. So, is there a risk that this deal gets oversold economically, at least in terms of GDP?
Well, I'd say like from an economic perspective, from the perspective of an economist, I think it should be clear that on balance this is positive or beneficial for economic growth. But indeed, if you look at the numbers, and I think these numbers are also quite well known in the public debate, that on average, for an average European country, it amounts to 0.1% GDP growth in 2031. Of course, there's differences if you look at certain countries. So for Spain or for Italy, it's more tangible, it's larger than at 0.1, while for maybe a country like Sweden or Central and Eastern European countries where you don't have any or a lot of existing trade relations, it's smaller. But that's like for the overall economy. And of course, if you look at it at the sector level, then for the automotive sector, for example, it's meaningful. While if you look at for European construction, it's also much lower impact on their like their sales volumes or their revenues also going forward.
It's unlikely to be a growth game changer, though, for Ireland, is it?
I would say like in general, um, where does the economic value of the deal sit, right? So it's mostly if if you take the perspective of like EU exporters, it's mostly in the manufacturing sector. So it's about cars, it's about machinery. To a certain degree, it's also about pharma, which is a relevant sector for Ireland, of course. And it's about high value. And if you look at the food sector, then it's about high value food products, including dairy, including wine, spirits. So these are some of the like sectors where you think there's like real economic value there. But like I said, uh, there's more historic, but also culinary trade ties with Mercosur countries from Spain and from Italy, and less from like northwestern European countries.
And beyond the numbers, there's a very strong symbolic angle here. And so, why would this be such a big win for the European Commission?
Yeah, so we've all seen, of course, that trade has been making a lot of headlines since Trump's return to office. And the EU's approach to trade is completely different than Trump's, right? So it's EU is very clear like and consistent over time that it wants to play by the rules when it comes to trade. So when this deal comes into effect, it's a big win for the EU Commission because it's proof that their approach is still working, and it's proof that rule-based trade deals in general are also still possible to be concluded, even in a time where you see more power plays from big economic blocs and big economies like the US and China.
And at a time when we're sitting in such a flux of geopolitical change, every day we wake up, there's a new headline, there's a new threat posed. Is this really important for the EU to push a big rules based trade deal then?
Yeah, so coming back to my previous point, because it shows that like rules-based trade is not that. It's still possible to find like-minded countries or blocs across the world who also see the threat of the US and China being really dominant in like existing trade relationships. This especially for this current European Commission, which has been very ambitious on the trade front from the start. Has been the biggest dossier that's has been on their table, for this commission, but also for many previous commissions. That right now, like they are able to align at least the majority interest to push ahead with this deal.
Yeah, and you highlight that there previously that one concrete example in this deal is dairy. So why do higher export quotas for EU cheese and milk powder to Mercosur matter right now?
Yeah, so of course the EU is a large exporter of dairy products and like a big range of dairy products, both commodities but also high-end products. But currently, what we see is that, well, at least EU exporters are facing difficulties, at least in two major markets. In the US, because of import tariffs, like because of the general import tariffs on any European export to the US. But also in China, with China imposing like retaliatory tariffs on some European dairy exports. And at the same time, there's limited growth, like demand growth in the EU itself, so in the domestic market. Uh, on that side, like Mercosur is currently a very small market for European exporters because Brazil, which is like the key country within the Mercosur bloc, mainly relies on Argentina and on other Mercosur countries. So the introduction of quota for dairy products could provide the basis for future growth. And well, but still, the practical question there is also whether that creates any direct opportunities for the Irish dairy industry. Because, like I said, the historical and culinary trade ties with Mercosur are more concentrated in the South European countries.
And politically, it's been a very tricky few months. Why is the Commission, do you think, having to work so hard to line up enough support among member states for this trade deal?
Well, clearly there are a lot of different interests that politicians have to weigh, both at the national level and at the sector level. And well, it's also clear that when it comes to trade and with such a big trade deal, that you can't do the right thing for everyone. And while the EU is larger in terms of population and GDP than Mercosur, then the Mercosur countries and especially Brazil, they are also an economic power by themselves. So in that regard, this deal is also different compared to deals with smaller countries like Vietnam, where the EU has more leverage as a big internal market compared to like a smaller economy and a smaller country. So also from the start, it has been clear that without any improvements in market entry for Mercosur agri-food products, there wouldn't be a deal at all because then it wouldn't be interesting, like economically interesting for the Mercosur side.
And we've seen proposals now to redirect 45 billion euro from the next EU budget towards agriculture.
Yeah, so maybe a bit of background on the process there. So the discussions on the next EU budget for 2028 to 2034, they have started, and this was always going to be a long and complex process because there's also so many interests involved. Uh, at the start, one of the key goals for the Commission was to have more flexibility in the budget because the experience with consecutive crises like COVID, the war in Ukraine, and the trade war shows that it helps if you have like flexible funds to apply them where required at that point in time. So the initial goal was to have less ring-fenced money for the CAP, for the Common Agricultural Policy. But under pressure of the agricultural sector, the Commission has been walking back on this intention. And I would say, like from an economic perspective, by doing so, the European Commission has traded more export opportunities for less flexibility in the upcoming budget.
And on top of that, of course, there are safeguard mechanisms to prevent sharp price drops. How are those supposed to work in practice in relation to the Mercosur trade deal?
Yeah, so there will be indeed increased monitoring of trade flows and EU market prices. Um, and in case prices drop by 5%, or when preferential import volumes go up by 5%, this will trigger an investigation by the European Commission. And if there is then evidence of market disruptions, then lower tariffs for that specific product, they can be suspended. So it provides a backstop in case of things not going as intended.
And even with all these sweeteners, though, Thais, we still see a real sense that farmer anger hasn't really gone away. And in Ireland, we had a massive protest recently. Tens of thousands of farmers turned out to vocalise their opposition to the deal. We've seen continuing protests in France and Spain. So why do you believe, with the safeguard mechanisms in place, the potential sweetener of more money on the table, that discontent is lingering?
Yeah, so in my view, this is really that you could see these concessions and these sweeteners as something, as applying band-aid to a wound. So it helps to treat the wound, but the pain itself doesn't go away. The cause of that pain is, well, I would say like the trade deal is an immediate concern in that regard, but still underlying, farmers work across Europe. They worry about livelihoods. They feel anger about double standards for products made within the EU and outside of the EU. These concessions, they are like applying band-aid, but they're still an underlying cause of concern amongst farmers, and something that they feel should be addressed more clearly by politicians to make sure that these underlying concerns are also taken into account.
Yeah, well, the clock is definitely ticking on the Mercosur deal. But for now, I'd really like to thank Thijs Geijer, Senior Sector Economist with the Dutch banking group ING, for his insight today. And thank you for listening. And please don't forget to rate and review this AgriFocus podcast on Spotify, Apple Podcasts, or wherever you get your podcasts.
This podcast is sponsored by AXA Farm Insurance. AXA offers tailored cover to fit your unique needs, whether it's public liability or protection for your family home, outbuildings, or farm vehicles. Based in Athlone, the AXA Farm team of agri-specialists and regional managers work together to ensure you receive the seamless support you need. Switching to AXA is easy thanks to an innovative online service that enables you to quickly and easily find the best cover for your needs. For more information, head to axa.ie. AXA Insurance Stack is regulated by the Central Bank of Ireland.